OFT program suitable for anyone who's looking for plan B. Our methodology do not require trader to glue themselves in front of a computer throughout the day. Our strategy do not require a trader to glue themselves and sit in front of the computer the whole day. A trader can continue to do what they want and at the same time create a second income. And this is best for those who like to work at home. Now, what's the difference between order flow program and other program out there in the market? There are many differences. The distinct difference is many programs out there, they teach a student how to use indicator, and from the indicator signal, or rather the signal generated by the indicator, the trader will just simply follow. And that's very wrong. Why? The reason is because the indicator cannot move the price. So if the indicator cannot move the price and you as a trader follow signal from the indicator, you are not trading, you are gambling actually. Sometimes win and often you lose. And when you lose, you don't even know why you lose. And if I may say, if you follow indicator, signal from indicator, you are actually trading blind. Distinct difference between OFT program and other program out there is, in our program, I train people to look into the financial market the way the big institutions are looking at. Those people who are always a winner, we want to copy them as close as possible. And with that, it allows OFT trader to able and have the ability to trade multiple asset class. Why retail trader often end up as a loser in this business? Now, to answer this question is very simple. I break down into three parts. Why retail trader often end up as a loser in this currency market? Is there any chance for retail trader to make some money in the financial market? The answer is yes. In this currency market, it is a zero-sum game. Now, in a zero-sum game, we can divide the trader into two main groups. Now, the institutions, professional traders is one group, and the retail trader is another group. Now, in a zero-sum game market, institution, the professional trader are always the one group of trader that always win. This is their business, this is their game. While the retail trader always end up provide liquidity to the market. So, as a retail trader, we need to learn how the big institution, the big order trader, how the professional trader, how they approach this financial market. And if they are bullish, they want to buy, we as a retail trader, we also want to buy. If they are bearish, they want to sell, we as a retail trader, we also want to sell. And we want to trade alongside with these people. We need to understand what are they thinking, what is their behavior. Most retail traders, when they want to learn how to trade, usually what they do is they go to the bookshop, buy a Forex book, or they go to internet and get some start to dig out some free information that are available on internet. And after a while, they start trading. This is a wrong way to start your learning journey. As a retail trader, if you want to trade like a professional trader, you need to understand how these people behave in the different market conditions. And you need to put aside all the indicator that you learn from the textbook, from the internet. Start looking into this financial market from the institution point of view. We need to understand these people's behavior, to understand how they approach the market. As a retail trader, we need to understand this and acknowledge this. The professional, the institution, they have so much money they can afford to hire very smart people to analyze the market for them. They have no worry about the liquidity. They have huge money in their account. They spend most of the time looking at the financial market, day in, day out. Whereas when we look at a retail trader, now what do we do most of the time? If you are working for a paycheck, you have to focus on your job first. If you are running your own business, you have to attend to your business first. So you only come to the financial market as and when you are free, maybe after work at night. So you can see the time and the energy that we put into this market, we really cannot compete against this professional trader. Another reason why retail traders are not successful in this currency trading is because most retail traders never really pay attention to understand what actually moved the price. Most retail traders, what they simply do is they just based on a few indicator signal, with the indicator ask them to buy, they go and buy. Indicator ask them to sell, they go and sell. Now what kind of indicator am I talking about? I'm talking about very common indicator, example, moving average. I'm talking about oscillators such as MACD, RSI, stochastic, things like that, right? Very, very common indicator. Now, most of the retail traders, they start off by trading by learning indicator. Now, why learning indicator to trade, follow the trade signal from indicator is wrong? Reason is very simple. Because you need to understand what actually moved the price. All these indicators will never move the price. You ask yourself, can the indicator that you depend on for the trade signal, can your indicator move the price? The answer is no. So if your indicator can't move the price and you are taking the signal from your indicator, now can we say that now you are actually simply trading based on luck? Now in financial market, you can't base on luck. You need to have the real skill set and knowledge. Otherwise, there's no place for you. So what actually moved the price? The price move is actually because of the big order trader, the big institution. They move into the market. If they are bullish, they start buying. If they are bearish, they start selling. It is because of their order. It is because of their order flow. Their order flow is huge. We are talking about a few 100 million to billion one time they come in to buy and sell. These are the traders who actually move the price. It is this big order trader who decide to enter the market that price start to move. It's nothing to do with your indicator. Indicator can never move the price. Indicator can never predict what this big institution going to do. So if indicator can neither do either one of them, and you as a retail trader, you take trading signal from your indicator, it doesn't work. It just sometimes work, and many times it doesn't work. And when it doesn't work, you have a losing trade. You don't even know why you have a losing trade. And that is why most of the retail traders fail. That is why you see most of the retail get it all wrong.